Welcome back. It's another Friday, another update to the portfolio, and what a painful last couple of days it has been, let me tell you. Without further ado, let's dive right into it. We'll talk about a few things about the gold, about the silver. We'll talk about the new Fed chairman, and what happened, and what's the result, and what does the portfolio look like currently. So let's dive right in. Sorry, I'm going to look away from you there. Here we are. Summary of the portfolio. As you can see, a couple of days ago we were up $10,329, and 2 days later we're up only $8,006. That sets me back 2.5 weeks. This is due to the tech sell-off by Microsoft. That's always a huge one. There's an earnings season right now, and tech companies are being priced in with their earnings. Volatility, volatility, volatility. On top of that, piggyback, Fed chairman nominee. Turns out this guy might not be the best for certain markets. Doesn't matter which ones they are. Volatility again. Gold got hit. Bunch of stuff got hit, but it doesn't really matter. It's in my portfolio. I've noticed the biggest exposure was minerals, and that's due to the something to do with the U.S. currency, the devaluation and debasing, and it just equals instability, equals not instability. What's the word I'm looking for? The unknown, and all of this stuff needs to get priced in. And so, yeah, the long and short lost about almost 14%. Over the last 2 days, and the long only portfolio lost obviously six. Not the best, but let me tell you one thing about these negative days. They always come in clusters, so I'm expecting a couple more, or maybe not at all, none at all, depending if this is already priced in or not. I doubt it. We are in earnings season, and a lot of it is going to be based on that now. But this shock of new chairman being announced and his policy being different than Jerome Powell, that sends ripples throughout the market, and that's where we're standing with that. I don't know if I've changed this home screen, this summary here since the last video, but this is what we're standing on, and the last day had produced a lot more color than usual. All this stuff in pink over here I should be closing, but this is due to I will sleep on it a couple of times because shocks like this tend to rebound really quickly. And fundamentally, underneath it all, these companies that are buying, they're all good. And the ones that I'm shorting, they're fundamentally crap. So it should all work itself out in the long run. How long will this slump last? I don't know. But Bitcoin and a bunch of cryptocurrencies and everything else has also corrected at the same time. Um, that's pretty much it. Let's just go quickly through the portfolio, see what's going on. Long TIGO, uh, TIGO, I forget the name of the company, and it's unavailable right now for some reason through Google Finance. It is Friday, and they shut down some of their servers, so some of these numbers might not be updating properly. Against CCI, Crown Castle, INC. As you can tell, everything's gone down. Price changed today for both of them. One went down $1, the other one went 11 cents. Obviously, the short one making money and the long one losing money today. Overall, this week, TIGO is still up, CCI is up. Not the most ideal, but the spread is increasing, which is what matters. You got to remember this. And if it pops, it pops. If it not, then we replace it. They're both young, 24 and 18 days. And yeah, I don't want to close those. NGD, New Gold, and Baxter International. See, these long ones are not showing up. That's for some reason, but that's because it's the weekend. This one, spread point loss minus 21%. Today's spread change went down 18%. This is due to the gold exposure, gold being hit major. Today, New gold had lost $2. That represents 20% essentially of their price. And so that's a sharp decline here. But let me just remember, following this along, these sharp inclines and declines happen all the time. And there's usually a reversal coming up right after. It might take a month or two or three, maybe a year. But if you believe in a company, you'll hold on to it. And this is the long-term game. Or, you know, these are obviously not that old, but they're already losing $95 over here. Either way, that's one of many. VFFIP, Village Farms International IP. I believe that's a paper, and yeah, spread is down 4.2%. I'm hoping for it to rebound to the upside. Um, I may be looking for a different short when it goes below minus 10% here. Just if it's not doing well right off the get-go, I'll consider replacing it, but I'll sleep on it. A lot of things have gone down lately, and they will rebound, like I said. CLS, Celestica, GIS. I forget GIS now. It doesn't matter. That's their performance for this week. Beeline. Um, yeah, today's spread change 11% down. You can see those sharp drops, but up and down is the name of the game, and one news does not change the outcome of everything. And yes, the AI, it might be a bubble, maybe it's not, but fundamentally underneath it all, if I go back to my indicator, which is my granddaddy to check, I've put this thing together a few years ago. I've mentioned this in my one of my previous videos. It goes back to 2023, I believe, and it's just collecting data ever since. Um, this thing, yeah, it goes back to 23. It started in August, I think, 23. Yeah, August 26th when I started taking these. It just shows you the positioning within the last 30 days of every company in the United States, um, every large company, anyways, and how they're positioning of the hedge funds and the big institutions, which is on the left side here. So on the right side here, it shows you the beast. The beast is like the general direction of the market, whereas this is the actual positioning of the big boys out there who have all the money. What are they doing? Are you going against them? Or are you going with them? So unless this number is quickly declining, I'm not really worried about this being a big correction. Corrections are inevitable. They always happen, and we've had a huge run up in gold and silver and all these different things. And a small correction, a large correction is inevitable. Um, whatever correction comes at us, the VIX is still below 20. It is creeping up, but like I said, fundamentally we are still okay, and there does not seem to be any panic in this case just yet. If these numbers change dramatically, then we have a problem, and that's when I'll be trimming back the portfolio, raising cash for sure. That's one of the things. If not coming out completely, because I'm a little iffy about 2026, not only due to some predictions that have been out there for years, but the ISM, if we go back to that, that's been negative for a very long time, and that's usually an indicator of 18 months into the future. Hold on, am I looking at the right thing? No, that's the actual report. We want to look at, oh, I just closed ISM. Oops. ISM report on business. It's a report by US biggest manufacturing companies, and it just shows you whether or not we're growing as an economy or if we're slowing down. So this thing has been below 50, which is a shrinking economy. Um, Growing is above 50, shrinking is below 50. We are very much slowing down. Um, New orders still negative, bouncing around, but they're not as bad as they were at the first, second quarter of 2025. Production is up, employment still negative, still slowing down. Supplier deliveries, inventories are dropping, customer inventories are dropping. Prices are leveled off, but they've dropped in 2025. Backlog of old orders. New exports are on the rise and imports are on a decline. Mind you, this is all United States. I'm using these numbers as an indicator for the stock market because United States represents the biggest stock market out there essentially. It's got the most liquidity in it, and that's where all the money's made. That's where all the good companies are. I mean, there's good companies all over the world, but this is where all the money's at. And so you follow it like a hawk, and usually it's an indicator of what's to come. And if this has been like this for 3 years now, and it keeps pushing to the downside, then we may be in for a show in 2026 because it looks like it's going down again. As much as I like these numbers above 50, that's what it is. So let's close that. Um, Another thing I wanted to talk, well, okay, let's quickly finish off going through the portfolio and then even go through the whole thing. Hut 8 Corp and Adobe, that's the performance for that. You can pause any of these and just go through them. This is essentially my whole portfolio, long short portfolio that's currently live. This is exactly what's happening. Like you see, this one over here, BCS, I believe that's Barclays and Flute. They're doing beautifully. Even all this down market and whatnot, it still did okay today. You know, Flute did outperformed on the downside, obviously, so I still made money on this trade. And this is, you know, 218 days on the long side, and then Flute is only 9 days old. And this here, obviously, which is the same for every single stock, each one of these charts out here. It shows you the daily price change, their beta, how much did they move up and down, how much can you expect these shocks, average daily moves over the last year here. It's just this sheet, if you go through this, you'll realize it gives you very detailed information on the technical side of how this price has been performing. This does not give you the financials, unfortunately, other than market cap and the earnings date, and that's pretty much it. Okay, well, you have some earnings here as well. But yeah, SSR mining. What happened to SSR mining? You see big decline in SSR and Roblox also a decline. So I'm making money on the Roblox, losing money on SSR. And today spread is down 2.14%. This is one of my better performing trades so far. 81% on the upside and 15% on the downside, which is pretty good. Holding on to these for sure. I mean, ultimately, you want this pink line to be just going up, and there's always going to be ups and downs. Sorry about that. There's always going to be ups and downs in this. I'll come back in a moment. I got to take that. And I'm back. Okay, so KGC, King Gold Cross. This one's off to the side. King Gold Corp, sorry. Spread change is down 11% today. There's once again another one of these gold exposure companies. When gold goes down, the miners go down, and that's what's going on. Gold reacted to the new Fed chairman, and it dropped quite a lot. So did silver, and so miners will follow that. CN Team, Sienna Corp, Altasian Corp. These two actually did okay, and long term, once again, you're looking for that. Even if there's some sharp turns in it here and there, you're still looking for that straight line up. PDLB, GoDaddy. Ponce Financial, GoDaddy. Yeah. Another thing, this is actually a good day for these guys. And even though I lost on the GoDaddy because that went up, I actually gained on the PDLB. So today is an up day by 1.5%. But not all was great. You know, it's still a $1,800 overall between the long only portfolio and the long and short. That was $1,800 hit today. That was like a 600 hit yesterday or something. And so if you look at the long only portfolio, if we go back to the summary, the long only suffered Long only suffered 1300. Sorry, from the top, it's like 1600. And then the long short portfolio, it suffered, was it $700? Um, yeah, it's long only is only 1.5% up, and we're still 11.3 for the year in the long short portfolio. So it's outperforming. It's definitely outperforming. The hedging works, and this will be a good indicating moving forward of what these long only trades and long and short hedging trades, how they perform and who does what and how this ends up at the end of 2026. And I expect for this to be a pretty crazy year. All right, this difference here, creme check, if you've noticed, I've added this just to make sure that my numbers that I have, everything here, added up, adds up to what the broker is reporting. These yellow numbers, what I take from my broker, and that's the actual account status and the floating for those two accounts. And then anything in gray is just math behind it. While these numbers here, sorry, this is the Fed numbers, the broker, Fed, the broker, and these are my numbers, and it's only off by 55.32, which is negligible. It's fine as long as it's not like $300, and then the next day it's like $400. At which point in time, I'll say, hey, something's not right. I need to check into the numbers. If not, then maybe the brokers. That's why it's creme check. Maybe they're forgetting something. Okay. Newmont Corporation and Figma. That's playing out okay so far. Figma's doing better than Newmont, obviously, but that's overall growing. I like that increase there. We have Grail and Zscaler. This is not doing too bad either. GSL and Amerigold. It seems like we've troughed and that it's going to trail up. CDE, Core Mining. Once again, one of those mining stocks exposed to gold and silver right there. And so sharp decline. But like I said, these things happen all the time. And you just got to wait them out. It's a shock. There's going to be a lot of fear right now, people dumping their stocks at the worst possible time. Where in fact, if you were to predict any of this, or you were lucky enough to find yourself in a situation like we are today, where the market or certain stocks have pulled back so much and their financials are good, the catalysts behind their movement are great. What you could do is you could take your cash and invest in those now as they pulled back, which is also a great strategy for the S&P 500. Every time it pulls back, and there's these major pullbacks, maybe once or twice a year, every time it pulls back, you take your capital and you deploy it into the S&P under SPY or whatever you want to put it under, but you definitely want to buy it on the pullbacks. That's how you make the money. You don't buy when there's already new highs every single day, because you're more than likely going to end up picking the top and you're going to get crushed by the falling prices. And most people, and I mean most, like 90% of people out there, they'll close those losers because they lost 10%, and rightfully so, controlling the risk. But getting in at the right time is more important, and finding those right moments is good. That's why I go back to sharp charts and I use pivot points, because those create very good opportunities where when you combine them with volume, you can pick and make really quick money just bouncing in between these two lines, because there's always resistance and support. They call it resistance, support, pivot line, Fibonacci's, whichever one you want to use. The moving average is, they're here, and I use the 20 for the 1 month, the 60 for the 3 month, the quarter, and MA 250 to represent the year of trading. And they're just technical indicators. And honestly, these pivot points are probably better than the MAs themselves. The people will tell you about golden crosses and all this different terminology. And yes, there'll be something there. But just look at what really happens and how the price behaves between these pivot points versus what it does with the moving averages. Moving averages just show you what was there, whereas the pivot point, it gives you a look into the future. Where could this price bounce from where it could be? This could fall to 460. or it could climb to 7.8 over here. One thing's for certain, every time it goes through these, there tends to be some volatility. There's resistance, there's support, and so it goes up and down. Good entry and exit points. If you're looking for long-term up, you'd be looking to enter at a 5.9. If it goes below that, next time you'll be looking to enter at 4.6. These are pivot points. Let me show you which ones they are. Pivot points on stock charts. One of my favorite indicators for those turning points right there. Another thing I want to mention, Finwiz, and I know we're getting off topic. It was supposed to be just a portfolio update, and it was a hit this week. Whatever, I'm set back 2.5 weeks essentially, but I'm still up. I don't care. That's the name of the game. There'll be pullbacks, there'll be corrections, and I'm still in. I'm not panicking and getting out. By no means am I doing that. And so moving forward, I wanted to show you something really cool in Finwiz, which we haven't gone over before. Just quickly showed you a map and what it is, but we didn't really use it. So this shows you the daily performance of S&P 500 companies and what happened today, essentially, across the whole board. You can find where all the greens are. Consumer defensives have done really well today. Healthcare has done really well. Financials, not so much. Technology, not so much. But the coolest thing that I wanted to show you is right on the bottom of this list. And you access it right here on the main menu. You go to Home, you click on Maps, and then right here in the map filter, you click on that. It's like one of the coolest websites. They publish this for free, which is amazing. It gives you the earnings day performance and earnings date. So if you're tracking companies and you're waiting for them to report, all this in pink is something that's coming up. Anything in this turquoise, anything in this blue color here is what's already reported. All right, whether it's up or not, this is just the date. And then you have earnings day performance. And this is where things get exciting because now you're starting to see the actual outcome on the day of the earnings. And so Microsoft had a okay earnings thing. I mean, they missed on one number, but everything else was stacking up. I don't know all the details, but sometimes these turn negative even though the numbers are positive. NVIDIA, this is an old number. They haven't reported just yet, I believe. NVIDIA's, let's look at when NVIDIA is showing up. This one is November 19th. So NVIDIA will report, it's coming up because now it's earnings season. But NVIDIA earnings are coming up on the 25th of February. So we have some time. And this one might be a major one to watch because if NVIDIA reports badly, this could send a ripple through the market again, and we're going to have some crazy volatility. You got to remember, these guys are doing business with this AI with a lot of people. And there's, Microsofts and Apples and whatever. Like everybody's into AI, and then NVIDIA's all over it because they're like manufacturing the chips or something, right? So we have that. But going back to this earnings day performance, it shows you just like, hey, anything in red, it's what's already reported. Anything in this burgundy, those are old numbers already. But anything that's coming up, it's still black. So these guys have not reported. And you can just still see this on the day of earnings. How is the stock market doing? There's a lot of green here. But what's really important is for you to look at the scale. And the map represents the entire stock market. How big are these companies? And how do they affect the stock market when their price jumps? Give me 1 second. All right, sorry about that. So just look at the scale of these things. I don't even know if I started at the right spot. Look at the scale of these, and when they report and their numbers are bad, they affect the market. If the markets are good, they affect the market because they represent essentially a quarter. These big companies, They represent even more than a quarter of the entire stock market. So of course you're going to move the stock market. So watching earnings will show you when the volatility will happen, when the opportunities will happen. Just an FYI. We'll get back to that in a future video. I just wanted to touch on that today. Something cool to show you since it is earnings season. Watch the earnings right here in color, which is great. This, we're going to be keeping an eye on this. This reports every Thursday, and this number updates on its own every Thursday. This is the latest. It was down 2.36%. If it goes down by 200 or more, that's a significant bell going off to do something. And at that point in time, make a decision whether or not we're going to be closing off or just reducing exposure. Probably raising a lot of cash, waiting for a pullback, and then using the capital to pick the bottom. All right, back to long and short portfolio tracker. I think there were a few. No, I think we've gone through all of them. We've gone through all of them. So summary, if you don't believe me, we're gonna bounce back from this. There could be 1 or 2 more days, and this will conclude this week already. We're gonna put a little line there. Maybe not that thick, just to keep it organized. So we're tracking now for 2 full weeks here, okay? And we're gonna start next week and watch these numbers grow again. There's ups and downs. It's never a straight line, but the math works. And when you hedge, you're taking out most of the risk instead of losing, you know, everything that you've gained. You're only losing a little bit. It's 1,200 bucks versus 700 bucks. Either way, they're both down no matter what, but the return overall since January 7th is still over $1,000 at 3.5%, which I'm pretty happy with. But I was already up over 35 here. It happens. It happens. So next week, same thing. On Friday, we'll send in an update. Maybe we'll talk about a little bit about stock picking and maybe a little bit more about Seeking Alpha. Seeking Alpha is an amazing website that I use. There's so much to talk about on this. I'd love to dive into a little bit more detail than just like showing you all these pages. We'll actually start stock picking with Seeking Alpha. I'll show you that you would love using this if you were to use this. There's free things. I pay for this service because it's just nothing short of amazing. Spectacular. Thank you very much. That's it. Painful week, like it took back everything I've earned in the last 2.5, but watch what happens. Within a month, we'll be back up. And yeah, stick to it, and we'll see you on the other side.